So I wanted to just spend a little bit of time today talking about our new butterfly class, which I'm excited we'll be doing. We'll be starting Monday. We'll go Monday and Wednesday for 3 weeks. I'll go over the schedule in a second. I've been taught a butterfly class in about 1.5 years, and quite a bit's changed in the last year. You say, what's changed in the last year? We've had a couple corrections in February, so we've had finally some high volatility, a market other than just going up. So we've had a little bit of change. And so let's jump in here. I'll go over a few butterflies today. We'll talk a little bit, but I'll focus on what are we going to be covering in this new class. Let's jump in here. So this just gives you a rough idea. What are some of the things that we'll be covering during the class? And you can see here it'll be a 3-week class. The first class will be this coming Monday, August 27th. If we're going to go Monday and Wednesday, we'll meet at 1 Central. Each class will go about an hour. Usually it goes more. It'll be a 3-week class. So it'll go Monday, August 27th. And I just put it here, a rough agenda. I'll be talking about a 15-day butterfly on Monday, August 27th, but I'll be talking about other foundational concepts, the different types of butterflies, the Greeks of the butterfly, kind of getting you started off right. And then what we're really going to focus on during this butterfly class, which is unique, is just basically the most kind of successful butterfly techniques that we've been using for weekly and monthly income, over the last 10 years or so. And so these are all successful butterfly techniques based on doing it. Not just back testing or theoretical, but through many, many students doing them. And so what we're going to be talking about is the latest up-to-date tweaks and how we trade these. You change them over time. How I look at a particular butterfly today may be much different than a year ago, based on my learning, based on what's going on in the market and stuff. So I'll be talking about a 15-day butterfly, which is a short-term trade. I usually look at like 7 of 15 days as short-term trades. And that's been one that we've been putting on for some years now. And it's a good, effective trade, and we'll be able to give you some practical results, how it's been. We'll spend the whole time talking about the mango fly. That's more of a little longer duration trade, 45 to 50 days, and he has a whole risk management plan built around that trade. It's been a very effective income trade in our community, very effective. And many students have had great results on this. This has been one of the more consistent methodologies, and that will be presented on August 29th. On September 5th, I'll focus on the time bomb butterfly. I'll show you an example of that today, more of a directional butterfly. I think that's one of the more effective speculative strategies that I've seen out there. And I've been doing a lot of these lately on the FANG stocks. I'll talk about a little bit about that today. Monday, September 10th, Mark Fenton, who works with me, will be doing an all-put flat fly, which is basically an out-of-the-money broken wing butterfly. This mango fly is more of an at-the-money broken wing type butterfly, but Mark's going to be talking about an out-of-the-money put broken wing butterfly, which has been incredibly successful and simple to use, in methodology over the last 4 years on live trading. And so I think, and what's great is Mark will go over and be able to give a lot more insight into the things he's learned and the things we've learned as a community on these types of trades going through the correction that we've had in February and March. So, because these are basically neutral to bullish strategies. And so one of the big kinks in the armor was the downside, more than a 5% move. And so they will share a lot of the benefits of what we've learned on that. And Wednesday, September 12th, Dan Sheridan, should be a comma here, Jay and or Mark will join me to chat about what short-term fly they use for consistent profits. Jay does a short-term butterfly. He calls the 14-day shortcake. Mark does a short-term one, and they'll be sharing that also. And then Monday, September 17th, I'm going to talk about two different butterflies. The high octane, which is actually a one-day butterfly that I really like, and I've really learned to tweak some of the guidelines and rules over the last year or two. So I'll share that with you. And also a new butterfly, which I really think you'll like. It's called, John Robinson says, will you discuss weekly flies? Let me just be clear. Sometimes it's confusing. Let's be honest. What are weekly flies? In other words, if we just use the word weekly, what does that mean? Okay, 7 days. So let's talk about that. Let's call them short-term trades, because let's be honest here. If we're doing weekly butterflies, let me ask you a question. Can I put on a 50-day weekly butterfly today that expires in 50 days? Can I put a 40-day weekly butterfly that put it on today that expires in 40 days? Can I put a 30-day weekly fly? In other words, does weekly mean short term? Yes or no? The answer is no. No. So you have to say short term. So I'll say short term weekly strategies, weeklies 7 to 14 days, really 1 to 14 days is what I'll do. We use weekly options all the time. I think it's just important to separate between, are we going to do short-term trades 7 to 14 days, or maybe longer-term trades 30 to 60, and that's what we're going to be doing. So during the class, like you can put here Monday, August 27th, that's a 15-day fly. I would call that a short-term fly. Will we be using weeklies and monthlies? Yeah, whatever, yeah, either one, but about 15 days. Jay doing the mango fly and Mark doing the all-put flat fly, those would be 45 to 60-day trades. Could they be using weeklies or monthlies, 45 or 60? Yeah, whatever, yeah, either one. Anyways, just wanted to clear that up. So Monday, September 17th, I'm going to talk about really a one-day butterfly. Expires in 1 day, and I've done a lot of that, a lot of those, and share with you some little more refined rules when I would not do that. And then I've got, who knows what anybody knows what is a centaur? Does anybody know what is a centaur? Hope I said it right, centaur. Anybody know what that is? If you were to look up the word C-E-N-T-A-U-R, do you know what that is? Half man and half horse, absolutely. Absolutely. Half man, half horse. So what this butterfly is, it's going to be half butterfly, half something else, half diagonal. And so what the centaur is it's a butterfly that you can do in very low volatility environment. It's a butterfly that you can get neutral or long vega. Because one of the problems with butterflies is when it gets 12 or under in the VIX, what's the problem? When the volatilities get real low and you put on a short vega strategy on a butterfly, it benefits from volatility going down. Well, when you're at 9 or 12, there's more probably of a chance the volatility can go up. So you stop doing it, what can you do? And so the centaur is kind of the answer to that, how I can tweak a butterfly in low volatility environments. And I think this is a really neat strategy, the centaur. Are these butterflies all balanced? If balanced means equal distance from the short to each of the longs, the answer is no. No. Some of these are, for example, if you look at these butterflies, if you look at the different butterflies that we have, this butterfly, the 15-day would be more of a broken wing butterfly, where there's a broken wing just means there's unequal distances between the short and each of the long strikes. This time bomb would be balanced butterfly. The all put would be unbalanced. So if balanced, Stephen, if you're talking about like doing a 90, 100, 110 butterfly, equal distance from each of the longs to the short. Some will be balanced, some will be unbalanced, but we'll talk about when we would do a balanced and when we would do an unbalanced. A lot of the times, the reason we do unbalanced butterflies is to get the deltas more close to delta neutral at the beginning. So we'll explain when we would do a balanced, when we would do an unbalanced. And so that's another thing that one of these, I'll also cover, again, this is a rough agenda, just giving you an idea what we'll cover, but I'll definitely cover balanced butterflies, all right? And make it clear when we do balanced butterflies and when we do unbalanced. So I think those will be a lot of the more successful butterflies we've covered, and we've really refined them over the years. So you'll be getting the latest how we're trading them, and I think a lot of them we have a little more fussiness in terms of when we trade them. The cost will be $297. Each class will be minimum an hour. So we'll have 6 classes, all classes are archived, and you can ask questions. So even if you can't make it there live, one of the stalwarts of our classes, or you can always, 2 months after the class, you can ask questions. They always come to me, and we will always welcome to ask questions as you review the material. I think that's about it. So that should be an exciting class. You know, it'd be exciting if we just did one of them, but this is the first time we've done where we're really giving you the top butterfly techniques for weekly and monthly income, and it saves you a lot of time and energy for $297 as far as very effective, that have been very well weathered and tested over quite a few years of live trading these things. Anyway, so I'm excited. That will be starting this coming Monday at 1 o'clock Central. We'll go Monday and Wednesday next week, and then the week after we'll skip Monday because it'll be Labor Day and go Wednesday. But these will be very thorough, seasoned strategies. So let's just talk about the market for a few minutes here. Here's SPX. It was about 28.64 when I took the slide a few minutes ago. And again, we've hit the high yesterday at 28.73. How many people thought we'd hit the high by now? How many people thought we'd hit the high that was hit in, what, January? That it took us 7 months to hit it. And in the meantime, you know, with the correction, the two little corrections, not little, but the two corrections there, it took us, what, 6-7 months to recover the high. Pretty amazing, isn't it? What's amazing to me, folks, is this. How long did it take here? We hit the highs in the SPX. That was near whatever, 28.70, right? And then it went down to, you know, almost 2,500. So here's the question. On this first correction that took place at the beginning of February, how long did it take to go down over 350 points? How long is this little period here? Anybody know? A snap of your fingers, right? 3 weeks. And then if you look at it, folks, how long did it take to do that again, right? So 3 weeks we went down, and then literally in another week or two, we did a shorter one, right? This is about 250 points. But if you look at what did it take, so 250 to 300 point moves, 2 of them that took about a couple weeks each. And then how long did it take to go up about 300 points? You know, just from this period, it took all the way from March, you know, 5 months or something. So I think that's an important lesson for a lot of, how many people learned some things in the 2 corrections that we've had this year? How many people learned anything? Did you learn anything? How many of you are now convinced volatility can go up and that the market can go down over 5%? How many of you are now believers that volatility can actually go up? And that, because over the last 4 or 5 years, I don't know how many students I've talked to that said, Dan, there's no way the market can go down over 5%. Oh, it can, right? And so for people with put credit spreads and that they thought they could never lose, or cash secured puts that were beautiful, or covered rights, or out of the money put broken wing butterflies, or, right? So what's the principle? Risk management, right? Risk management and really learning about these strategies. VIX today is around 12.16. So, you know, we're at some of the lower levels of the year, right? I mean, VIX this year, you know, 10's been about the lowest around there, 10 to 12. 12's pretty low. We don't stay at 10 too long. In 2017, we definitely were in the very unusual, this like October, November area. We parked around 9 or 10 quite a bit. So we're in a very low volatility environment right now, not the lowest, but pretty low. And with some of the highest levels in SPX in the history of civilization as we know it. And there's just a couple, which is because we're getting ready for the butterfly class that starts Monday, I'm just going to talk about a couple. I could have talked about, you know, different ones that we'll be focusing on next week. But here's just, again, short-term fly. Again, I'm defining a short-term fly as something 1 to 15, 1 to 16 days, right? And I'm using weekly options. I could be using monthly options, right? But it's something that expires in a short period of time. And here's an example today. We usually, in one of the trades that I'll talk about, is the 15-day butterfly, which we put on every Thursday. But you say, Dan, why can't you talk about it today? Well, today's not Thursday, right? So this is the expiration I would use tomorrow when I put it on September 7th. 16 days from expiration today. Tomorrow is going to be 15, so I'd be using the SEP7. But generally, this is how I set up a 15-day butterfly, which has been very effective. SPX was around 28.65 when I was looking at this, and we sell 2. This one's all call. Sell 2 at the money calls. Right at the money. This is your expiration graph in green. This is your graph today. We call that a T+0 graph. And then this would be called a balanced butter. No, this would be called an unbalanced. So I'm selling the at the money calls. I'm buying my long about 30 points lower, and I'm buying my upper strike long 25 points up. And usually I'm doing a broken wing to get my position deltas a little bit closer to 0. And this is a short-term trade, so my theta is about 14, and my vega short 77. What's the foundation of a butterfly? How does a butterfly make money? Why does a butterfly make money? Why would you do a butterfly? What's the foundation of a butterfly? What's the foundation generally of butterflies? I mean, there's many different types of butterflies, but of at-the-money butterflies, the foundation is something called a at-the-money straddle. What do you mean? What's the gist of a short-term butterfly? You're selling the at-the-money call and put, or the at-the-money call, but you're selling the at-the-money options. Why is that cool? Because the at-the-money options have the most time premium, which also means if you have the most time premium, that's the part of an option that decays the most. So we're selling 2 of the option with the most time premium, and then we're buying an option on either side of that as a hedge 30 points away, and the options we're buying have less time premium. So what does that mean in Spanish, English, and Norwegian? What it means is that the way, at least the graph shows you, that you can make money on these butterflies at expiration if the stock isn't too far from the short strike, at least this is your expiration graph. So how does that happen? Because at expiration, if we close near the short strike, remember, I'm selling the one with the most time premium. So if we close near the short strike, my short options are decaying a lot more than my long options were. Because I'm selling the ones with the most time premium, that's how you make money on it. That's one of the ways you make money. And we'll be showing you a lot next week how we trade these to get the probabilities in our favor, which is a big deal, right? We don't stay in these trades till expiration. So this butterfly is $10 debit, so one contract would be $1,000. And this will be a short-term fly. We'll tell you how I'll focus a lot on the 15-day fly in one class and show you, when we put it on. When do we usually get the trade off? How many adjustments would we do? What's the best adjustments for these? Over and over. What's ideal position Greeks when putting it on? Basically how to trade it. And so this is a short-term fly, and generally we're in these 1 or 2 days, and you get pretty good positive theta on these trades, and these are effective. Would we rather have a little bit higher volatility? We would, than a 12, but nothing wrong with trading them at a 12, and we'll talk about that. So we'll be focusing on different durations, longer term as well as shorter term. Dave's question was, when you go up or down 30 points, in this case, I'm going down 30 points from my short to buy my lower strike long call, and I'm going up 25 points to buy my upper strike long call. When you go up or down 30, is that due to the high strike? Say the stock is at 100, will you go up or down 30? Yes, some of it is depending on the price of the underlying. We do a lot in SPX and Russell and some higher price stocks, but your width would be different based on the underlying, yes. So here's Netflix at 344 up today, and it's come off quite a bit from the highs, and it's working our way up a little bit, trending up a little bit. And so, it's not easy to go in and buy a call or buy a put or even a vertical trade on a high-priced stock. Do you agree? That can be expensive. How many agree that going in to buy a call or put or buying a vertical trade in an SPX or RUT or one of these high-priced FANG stocks, Netflix, Amazon, Google, can be expensive? Any of you ever noticed if you have a directional opinion on some of these higher-priced stocks or indexes, there's not too many really cheap calls? Things are expensive. And so the butterflies, these directional butterflies, offer a cheaper way to play a directional opinion. And so this would be an example in a 9-day directional butterfly in Netflix. And I'll talk about this trade. We call it a time bomb, and which duration to choose, when I would go 30 days out, when I would go 9 days, which duration would I pick, how would I pick the short strike, and the most important, how would I manage it? But here's an example with Netflix at $344, and I'm going in the August 31 expiration, which is a week from Friday, and I'm setting my short strike about 11 points up. So it's a 9-day butterfly. The expiration is a week from Friday. I'm setting my short strike to 355 calls, about 11 points up, and then I'm buying my long calls 10 points down and 10 points up, and the butterfly is going for $175, $175. It's a little bit long, so this is where the underlying is when I looked last, 344. This is the expiration graph on a $175 investment, just looking at one contract, and this is the graph today, called the T+0 curve. It's a positive theta trade, a little bit long deltas. And I think this can be a very effective strategy, but I think you have to be very careful which duration you choose, because on these directional butterflies, let me ask you a question. I'm putting a butterfly on, and I kind of want it to go near my short strike, but do I want it to go to my short strike too early? No, that's why it's important. You know, if I were to do this butterfly at the 355 strike, like 1 month out, 30 days, and it went to my short strike in 1 day, I wouldn't make any money. Picking the right duration is crucial in these trades. And then, of course, the risk management. So these are a couple of the butterflies that we'll be covering next week, or over the course of the 3-week class. The directional butterfly, and I've been using it in a lot of the FANG stocks, your Amazons and Google and Netflix and Teslas, and not Tesla, but I mean, I use Tesla too. And then the short-term fly. But I just wanted to kind of refocus and just get you to let you know exactly a good idea of what we're going to cover in the 3-week class, who was going to be speaking, what we were going to be talking on, and just give you a pretty good rough agenda. And I think it'll be exciting that we're going to be hitting on some of the most successful butterfly methodologies we use, and going through those with very specific guidelines. And these are very well weather tested. These aren't just theories. So if you have any questions, I'll stay around for a couple minutes. If not, look forward to seeing you at the class. You can just go to the front page of Sheridan Mentoring and sign up. If you have any questions between now and then on anything going in, you know, what's going to be covered in the class, feel free to email me, Dan@SheridanMentoring.com, Dan@SheridanMentoring.com. If you have any questions on class content, again, even if you're working, all the classes will be recorded and archived. We'll have live class trades that you'll be sent out emails when I do anything, and just try to be practical with these things. And so any other questions? All right, thanks everybody. Have a wonderful day.